Hey everyone, welcome back to Box. In this video I'm going to give a market update on stocks, bonds and Bitcoin. If you like this kind of content, consider leaving a like and subscribing to the channel. And as usual, nothing in this video is financial advice. Before I go any further, I just wanted to thank everyone for subscribing to the channel. We hit 100 subscribers. It's all going so very, very fast, and all I can do is say thank you again. So the best place to start, in my opinion, is stocks. So I was joking around on X, actually, with one of my favorite users I follow on X, Market Doctor. We actually may have found the Trump put, meaning every time we see a rip, that's basically the Trump put, all right? Every time you see a rip in the market, that's where Trump just comes out and he says something and everything pukes. But all jokes aside, again, I defer to what I said on one of my previous videos where, how to deal with a bear market. And again, I'm still cautious on that. I'm still not convinced either way. I mean, I'm not convinced this is the beginning of a new bounce and we're up after the races, and I'm not convinced we're in a bear market. I still don't know. What I can tell you is that every time we rip and we have these massive swings to the downside, that every time we see that this sort of price action right here, it makes me tilt a little bit more towards the bear case, really. And why is that? Because usually, and really, this is the perfect example of this is on the S&P 500 and what we saw in 2022. But in reality, you just have to go back and see what happens in a bear market, because in our minds, bear markets, we usually think of going from point A to point B, and usually we think that is a straightforward process, because you go from 4,800 to 3,500. But it's never a linear process. It's, by the time you get there, I mean, a lot has happened. And the way I described the bear market in my previous video is that, well, this may be overall a bear market. The problem with a bear market is that you have these intermittent cycles in between. So you go from a bear market to a bull market, bear market, bull market, and so on and so forth. And that is really the problem with bear markets, because, as they say, bear markets make fools of both bulls and bears, because it's got a bit of everything. All right, you've got the overall decline, granted, but in between you have these very, very abrupt rallies. All right, everybody just trying to pick the bottom. Eventually, in the short term, they might be right, and you see these rips. There's price ripping higher, but then eventually it just goes down, and then you have people keep on piling in, trying to pick the bottom. They're right for about 5 minutes. All right, price goes higher, and eventually it just results to the downside. And actually, for this, you can actually go and read many reports on what is going on with retail buying. We have seen record inflows by retail in the past few weeks, which that might seem like good news. If you read that people are buying the dip, that means that people are bullish on stocks. But again, I go back to what I was saying in my previous videos, meaning what makes a bull market? In a bull market, you have people continuously trying to sell the top, call the top, short the top, right? This is the top. Why? Because the price went up. And that's apparently a good enough reason to short everything. And occasionally you have these abrupt dips, which might seem dramatic in the short term, but eventually everything works out fine. Shorts have their 5 minutes of fame, but eventually go back up. And eventually people just keep piling on in, saying, there's the top. Why? Because the price went up. It can't go any further. Sure enough, I mean, people might be right, and again, for 5 minutes they have their 5 minutes of fame, but again, sure enough, the price goes up, right? Just because the price keeps going up doesn't make a good enough reason to short something, right? On the flip side, in a bear market, just because the price went down is not a good enough of a reason to go long. Oh, it went down 15%. How low can it go? Well, the answer is usually more, and the answer is 20%, then 24, and eventually 28. So, excuse me. Am I saying that this is a bear market? No. What I am saying is that you don't usually see these big rips higher. We have 9.5% rip higher. We don't usually see these kind of movements outside of a bear market. We usually see these during overall declines. And again, if I'm not mistaken, we actually did have, well, maybe not 9%, but again, right here it was a 1.5%. Maybe my memory is playing up. I'm getting old. 3%, 2%. Again, maybe on the weekly it might seem a little bit more dramatic, but in any case, you get the picture. Same thing today. Just looking at the Qs now, we got headlines about 240% tariffs on China. So again, we're flip-flopping on the flip-flopping of the flip-flop at this point. Again, I maintain the view that it doesn't pay to be a hero in this environment. If you really have to, and you can't resist the urge to go long or short it, at the very least, I would just cut back, meaning things are volatile. Just be careful. That's all I'm trying to say, because again, as I was saying before, bear markets make a fool of everyone. By the time you're on the other side, we're all covered in mud. No one gets spared in a bear market. That's the problem with bear markets. It's not a straightforward process. It is twice as hard to manage as a bull market, because bull markets, everything just goes up. You might have a few blips here and there, but overall, big deal. You have a 5% decline. Who cares? It goes back up. In a bear market, well, potentially what we're seeing right now, 10% down in a week, 8% up the next week, currently down 4% this week. It's easy to get whipsawed in this kind of environment, so be careful. And I still maintain the view that at this point, technicals really take the back seat, meaning that economic data and economic policy is in the driver's seat. Now that has actually, covered my face in mud because I've been saying the exact same thing for something like TLT, and that this is a good segue to move on to bonds, because I remember, and if you've been watching my videos, you'll know this. While we were up here, I spent most of that time arguing that technicals don't matter. Yeah, we have this trend line, and we might back test it, but it doesn't really matter, because it doesn't matter how much I squiggle on the chart, how many parallel channels I draw, this and that, bull flags. It doesn't matter, because at the end, what will determine everything is the data and the headlines. Sure enough, the squigglies win. All right. we have had a successful back test of the trend line we broke out of in February. All right. It took a while, and it actually took possible forced liquidations, which again I was about to get to. If you look at the 30-year yield, all right, there's still a lot of work to be done here, and there's been a lot of damage done. A lot of damage was done like last week, and there's still a lot of ground to be made up. But I'll say this on the bond side of the equation: every day we see lower yields, and especially on days where stocks are going down, so bonds actually doing their job, to me is just a further indication of the fact that what we saw on Wednesday, right here, well, yeah, what culminated on Wednesday, and again, what I said possibly on Wednesday morning when I woke up, that it could be just forced liquidation. Every day that goes by and we see lower yields with stocks going down, just makes that scenario more and more plausible. I wouldn't get too excited just yet. There could still be some, shenanigans going on. But again, I still maintain an optimistic outlook. The optimistic outlook that I had at the beginning of the year when I started making videos on bonds. And even here, I still was optimistic on bonds. Albeit a bit scared because, this isn't, if you see something like this, it wasn't, great news to say the least. But what gave me some comfort is the fact that as we moved into April 2nd, and actually even after April 2nd, bonds were doing their job. All right? Bonds were doing what they're supposed to do. Now, would they, having an exceptional time? No. I mean, they honestly, it would have been the case to, expect more out of bonds. Sure enough, if what we saw was kind of masqueraded and hidden by potential forced liquidations in the system, then I expect bonds to go back on their merry way. And looking at the monthly candle, for example, yes, we would be talking about 16 basis points, which, isn't a little bit. It's still quite a bit. But could this just be a doji candle? I would not be surprised at all if, this would really end up being a doji candle. Meaning, in effect, I wanted to go on the weekly. Say this would kind of be a doji candle right here for 60. I would not be surprised. Now, this will really sound ridiculous. Imagine if we close the week with a massive bearish engulfing candle. Now, this is me talking technical again after I said I wouldn't be talking technical, but here I am. I guess I have learned my lessons from the TLT chart. Imagine if we have a massive bearish engulfing candle. Right? We just finished the week actually lower than where we opened last week. Especially in a week where coming out of the week where we saw a lot of bearish headlines on the dollar, on bonds, on treasuries. Again, it would be quite the contrarian take. I don't have many strong feelings on that. Overall, I'd still, and don't be a hero. What I will say is that as long as each day that goes by where we see stocks lower and bonds lower, and bond yields lower, to me, it's just a further indication of the fact that what we saw here potentially was forced liquidation. Something blew up, basis trade, FX managers trying to shore up dollars. I don't know. It's way above my pay grade. But again, each day we see, yields lower, I think you can make the case for that. So again, how do bonds look? I think that having had I'm forced to talk about the technicals really, aren't I? Having had the backtest of the trend line, like we had, mind you, in July of 2024, actually. And given the fact that perhaps, as I've been saying over the weekend, potentially we are about to see a shift in narrative, meaning that this tariff drama, as time goes by, might take passenger seat, and the driver's seat might be taken by the economy. Meaning that, if I'm not mistaken, next week we do have, if I'm not mistaken, actually some PMIs. Yeah. If the PMIs come in negative, I think we could definitely see bonds having a bid, catching a bid. And again, as we move closer to non-farm payrolls, if the damage has been done, which could be possible, I would expect that to be actually a factor, all right, as opposed to what we saw last month's, the non-farm payroll report for the month of March, where it was a non-factor, right? Everybody just pushed it aside. So, but this is really getting way too ahead of ourselves. In the short term, again, all I can say is don't be a hero, all right? Things can move, and you can easily get whipsawed. In times like these, the best thing you can do is not get shaken out, all right? Pull back on the leverage. In fact, I would say don't use leverage at all. That's definitely my style of going about things, because I can be wrong, all right? I can be wrong, and someone else can be wrong and have to liquidate, and will cause me to be wrong, all right? So I wouldn't be a hero, whatever you're invested in. And that brings me to Bitcoin. There is one thing to be said, and this is something that isn't definitely an original thought, but I have to give it to Bitcoin. It is holding up better than I would have expected. Like, if you had told me at the beginning of March that the S&P 500 was down about 1,000 points, I would have told you, well, Bitcoin's probably down at 60. Yeah, just putting my finger in the air and just, that's probably what I would have said. Now, I go back to something I said a little while ago, is that Bitcoin has the habit on the way down of having these intermittent phases where everything seems to be holding up better than everyone expects. And the best parallel I can point towards is actually this period of time right here, from really the beginning of the year in 2022 till the week of March 28th. And I remember this time frame as if it happened yesterday. All right, because I remember seeing this, Bitcoin's making higher lows and higher highs. Great. I mean, what more do you want? Well, and again, Bitcoin was doing this at the same time when the S&P 500, for example, let's go back on the weekly here. So from the week of January 3rd, from the top till March 28th, all right, right here, I mean, the S&P went down 3.5%. And if you discount the wick, we were actually 5% down. But again, just looking at the chart, we were down 3.5%. All right. In that time frame, meaning from January 3rd, lowest point, from March, Bitcoin was up 20%. And I remember this time frame because, again, people were pointing to the fact that, in this right here, we had inflation breaking out at around over 7%. We had the Fed starting to hike rates, and we had the Ukraine war. And in the face of that, 3 huge regime shifts, Bitcoin was putting higher lows and higher highs. And I remember everybody pointing to the fact that, hey, Bitcoin's holding pretty well. But given enough time, this is what followed. Now, is it over for Bitcoin? I have absolutely no idea, as as with everything else. What I can tell you is that given enough time, if we continue to see deleveraging in stocks, and you continue to see the risk off bid in, say, things like treasuries and potentially gold, although I'll leave gold for another video. If you continue to see this regime, meaning the risk off regime, continue to play out, that's just, Bitcoin going against the clock, right? I mean, each day that goes by, it's just more pressure building on Bitcoin, in my opinion. We are below the bull market support band, as we were right here. And you could easily make the parallel between this being a bear flag and this being a bear flag as well. To which I can only say, time will tell whether the squigglies on the chart will be right or this was just a massive buying opportunity, which again could very well be the case. It could very well be the case that it's just like a 2017, 2018 kind of moment where you have your, what was this? Your 30% decline, which again, this is exactly the kind of decline we've seen from the top to the current bottom, if I'm not mistaken. Yeah, it's a 31% decline, which, in crypto terms is like a 2% decline in the stocks. I mean, if you're scared or surprised by a 30% decline in Bitcoin, I mean, all I can say is welcome to crypto. So again, I would not, break the champagne out just yet, because Bitcoin has the bad habit of making you think that it's holding up. It's finally matured to its risk-off asset, and then just, things break apart fairly quick. And again, I remember this decline right here. This was being caused by the Luna kind of collapse. Luna and Terra collapsed with Kwon Do, I think his name was, the South Korean. But again, everything has its cause, and who knows if we get a decline of that magnitude, what the narrative will be. So overall, it's hard to say that we have broken out of, that we've brushed off the bear market, the possibility of being in a bear market just yet, at least. Again, I think that the best thing you can do is defend your capital. Don't use leverage, and don't be a hero. If you absolutely want to be a hero, buy spot. Don't get greedy. Play your levels, play your technicals, do whatever you have to do. Again, nothing in this video is financial advice, I'll say it again. But take it from a friend. You don't have to be a hero. The markets will be here in a year. And if they won't be here in a year, you'll have bigger problems to deal with. So who cares? The markets will be here in a year. They'll be here in 2 years. You can still make money. So the best thing you can do in this environment is don't lose money. Don't get shaken out. If you like this kind of content, consider leaving a like and subscribing to the channel. And again, thank you to everyone that subscribed. I've been leaving likes and commenting. I'll be busy these next few days, and hopefully I'll be back to my normal self with my voice and throat. And next week, hopefully I'll be making more videos than I've been making this week. I'll see you next time. Bye.